So I think we've got a longer cycle. I think it will almost certainly outperform the last cycle and looks more like 2017 to me, which guess what? Was a Trump cycle. And we entered the Trump cycle last time with tariffs and, oh my God, this and that. Rates were going up and the dollar was going up. Trump came into office and immediately said the dollar's too high. The dollar came lower. China were also near recession. They had to stimulate. They spent the rest of the next 2 years stimulating. And that's what drove the crypto cycle in 2017. So we've got an incredible similar setup to 2017, which you were around for that one. It was bullish as hell.
Real Vision CEO Raoul Pal believes that current crypto bull cycle could be even stronger than the previous one, which saw tremendous increases. Pal thinks that a period he refers to as the everything code is about to begin, when technology, liquidity, and macro forces come together to cause an unparalleled market upswing. This cycle is much more like 2017, with global stimulus increasing, AI boosting productivity, and institutional capital pouring into digital assets, as opposed to 2021, when liquidity dried up too quickly. As the macro situation turns optimistic, Raoul predictions a large wave of investment in risk assets, Ethereum, and Bitcoin. If he is correct, one of the most profitable setups in history is about to begin. Watch till the end, as Raoul Pal shares his most recent thoughts on cryptocurrency, liquidity cycles, and future developments. Also, a quick reminder, only a small percentage of viewers are subscribed. If you enjoy deep dives into crypto and finance, hit that like button and subscribe. It's free and helps the channel grow. Now let's get back and hear what he has to say.
Where are we now compared to what your expectations were back in November, December when during our last interview?
In terms of which? Crypto?
General market, crypto. General market sentiment, from a macro perspective as well. Has that changed your thesis in any way? Has that altered it in any way? More bullish, less bullish?
No, it's exactly where I think it is, which is we're now in the part of the cycle which tends to be what I call the banana singularity, when things start to get really crazy. We've seen that with the Trump coin and whatever. What we're still missing is the massive liquidity injections that should come into the market from the central banks and governments. We've got the US will be draining what's known as the Treasury General Account, which is their checking account. That will increase liquidity significantly in the US over the next few months until they negotiate the debt ceiling. I think there is a broader deal that's going to get done with the dollar and China, and I think the US has been using the strong dollar as a negotiation point with China. China can't stimulate its broken economy right now until the dollar weakens, because if they stimulate, they'll break the peg against the dollar, which they do not want. They don't want capital flight. So you need the dollar to come down, and then the Chinese can stimulate and help the world economy recover. The US knows this, and it's a tool for everybody. If Chinese economy starts to recover, they'll buy US treasuries. So we're at the really interesting point in the cycle where all the debt has to get refinanced, all the games have to get played, the dollar needs to weaken, rates will come down, and everyone will refinance their debts by adding liquidity. What does that all mean? All of the macro stuff, all it means is number go up. Liquidity is debasement of currency. Debasement of currency is the driver of crypto prices and all asset prices. So it all lies ahead this year. What's interesting is the discussion around when the cycle ends. So a lot of people have PTSD because of the last cycle, and that finished early. It peaked in April, went down 50%, up, made a new high, and then kind of just failed, right? That was driven by the fact that the business cycle, the ISM survey, peaked in March 2021. Why? Because we had that snap crash from COVID and then snap back up. And the business cycle peaked, as did liquidity. So the cycle peaked. So as it went down again, tried to come up again, but kind of failed because there was no follow through because the business cycle had peaked. This time around, the business cycle is actually still below 50, which is the slow growth zone, not recession zone, but slow growth. And all the forward-looking indicators say the US economy and the global economy is about to get a lot stronger. And so we're nowhere near peaking. In fact, we're only just bottoming. So the chances are that we might even go through all the way till Q1 2026. So I think we've got a longer cycle. I think it will almost certainly outperform the last cycle and looks more like 2017 to me, which guess what? Was a Trump cycle. And we entered the Trump cycle last time with tariffs and, oh my God, this and that. Rates were going up and the dollar was going up. Trump came into office and immediately said the dollar's too high. The dollar came lower. China were also near recession. They had to stimulate. They spent the rest of the next 2 years stimulating. And that's what drove the crypto cycle in 2017. So we've got an incredible similar setup to 2017, which you were around for that one. It was bullish as hell.
So for people that weren't there in that cycle compared to the last one, essentially, if we see a similar cycle, then we'll probably see it go into November.
Yeah, or maybe, as I said, it could even push into, that
Early.
cycle. Alts peaked in Jan or Feb, right?
They did, yeah.
We witnessed a huge cryptocurrency rally back in 2017. After Bitcoin first increased, altcoins blew up and the market reached all-time highs. Now that comparable circumstances are coming together, another long bull run that lasts far longer than most people anticipate may be imminent. Analysts like Raoul Pal expect a familiar scenario with Trump returning to office, possible rate cuts, higher government expenditure, and a spike in global liquidity, all of which would provide the ideal conditions for another significant rise. However, there is a significant distinction this time around. Bitcoin ETFs. Bitcoin has surpassed $100,000 for the first time thanks to these ETFs, which have already attracted billions of institutional capital, unlike in 2017. As he explains everything, the market is poised for another explosive move, as evidenced by on-chain data that reveals long-term holders are building up, the exchange supply is decreasing, and interest in cryptocurrencies is growing globally. Let's return to Raoul Pal.
Liquidity is the big daddy here. I got caught out by this in 2017. By about April or May, I sold out of my Bitcoin. I was up 10x because I bought it at 200. It was trading at 2,000. I'm like, it's a pretty good trade. I took the money off the table. It consolidated for a little bit. Then it went up another 10x into the end of the year. People can't understand this. It's like, if Bitcoin went up 10x from here, we're at $1 million. Now, I'm not expecting a 10x, but what I'm saying is people did the same thing then. And what happens is you sell out positions, the market corrects, and because liquidity is still the driver, everybody gets forced back into their positions, and that creates this violent end-of-year move. That's possible. I'm not saying it's definite, but I think of improbabilities, and that's where my head's at.
So when you put all these factors together, what's happening in the SEC and how bullish the current administration is towards crypto, and when you look at the macro factors as well, could we see a super cycle? Is it a sin if we discuss it this time around?
I'm going to flip it a different way of looking at it. Has Amazon been in a super cycle? Has Microsoft? Yeah. Has Google? Yeah. Have they all had massive correction periods during the downside of the 4-year cycle? Yes, every single time. So what you don't do is you don't get rid of the cyclicality. It's the compounding of returns over time. Now, the only change that I could say is possible, and I think is likely, is that the downside in Bitcoin is not as big as people expect. Right? The free money trade is you try and sell out somewhere near the top, or even if you don't sell out, you're waiting for the dip to buy more. The answer is usually wait till it's down 70%, 75%, start buying, and you make a 20, 30x on that trade every time. My guess is it probably ends up down 40 and not down 75. And that will create a lot of complications for people who are waiting for the big leg lower. And people are going to get caught out, I think, in this cycle. Now, that doesn't mean all of the long tail stuff doesn't go down 90%. Of course it will. But I'm thinking about Bitcoin itself as the anchor price to this whole thing. I kind of am the impression of what changes is the downside is reduced in Bitcoin. Crypto is this incredible, fast, super high velocity, creative destruction cycle. You don't know what's going to be really valuable until the bottom of the cycle. The things that survive become the best trades. Solana, Ethereum. So Ethereum in 2019, absolute killer trade. 2018, Solana in 2022, absolute killer. So what you need to see is when those things go down 95%, everything goes down 95%. So now you've got all of these things at a discount. Your job is to find out what really has network effects, what is really powering an ecosystem. And what you'll find is a bunch of these are kind of dead chains because they were just using money from the foundation to pay for economic activity. But then you looked at Solana and there was a ton of developers building. The community was like focused. Tolly was a good leader. You're like, okay, there's signal here. So I like the cyclicality where you wash out all the bad ideas. People are testing innovation, and that's good, right? A lot of innovation. You do VC, tons of VC things go to zero. But if you get the right ones, they don't. You can make a lot of money out of them. So that, I think, is the power law.
The failure rate in crypto is just so much higher than traditional VC. And I'm just hoping
there's more crypto projects.
Just the amount of volume. Yeah.
Also, don't forget, unlike VC, these are coming to market instantly. So if you were to look at really early stage seed investments, And if you were to have a real-time mark-to-market on those, they'd be horrific. Are we going to die today? Are we going to survive tomorrow? Are we going to die today? I mean, that's all it is. They're the same. It's the same thing. It just happens to be the earlier stage bit that's hidden, because in VC there's no mark-to-market really until a token launches or equity becomes tradable, i.e. different people want to pay for the equity.
Raoul Pal concludes his research by pointing out a crucial 2017 lesson. Liquidity is the primary factor influencing cryptocurrency markets. He remembers selling Bitcoin too early in that cycle, only to see it soar tenfold more. Many investors will sell too soon, thinking the rally is over. But as liquidity continues to flow, they'll be forced back in, leading to a violent end-of-year move. Pal takes into account the potential for a cryptocurrency supercycle as well. He points out that although big tech firms like Amazon, Microsoft, and Google go through cyclical declines, network effects and compounding returns keep them on an upward track over the long run. In the same way, Bitcoin's decline might not be as severe as previous cycles. He says it might only drop 40% rather than 75% that many anticipate, which might keep investors waiting for a further dip. Beyond Bitcoin, Pal highlights that weak markets are when the real cryptocurrency winners appear. The finest long-term investments are those that endure, such as Ethereum in 2018 and Solana in 2022. While many altcoins will eventually disappear, those with robust communities, good leadership, and actual network effects will prosper. He likens this process to venture capital, where the few successful projects yield enormous returns while the majority fail. In the end, Pal's point is very clear. Crypto is a fast-paced cycle of invention and devastation. Even if volatility is unavoidable, the greatest people to profit from the next wave of exponential development will be those who comprehend liquidity, market cycles, and network effects. And as always, happy investing.